Three stocks from companies that are disrupting their industries. NVIDIA. An eye makes NVIDIA a very smart play. Intuitive Surgical. Surgical procedures are back, and that is good news for Intuitive Surgical. Booking Holdings. Travel remains top of mind for people worldwide, which makes Booking Holdings a solid stock option. Let's dive in. Here are the three most innovative companies that are disrupting their industries. Welcome to Timely Investment Research. Until interest rates started increasing in 2022, companies disrupting industries were very popular with investors. Think FANG stocks and others. Today, investors aren't nearly as quick to jump on the bandwagon of fast-growing disruptors. That doesn't mean you shouldn't get exposure to companies innovating and changing their industries. It just means you have to be selective. Who are these companies? To help me decide which three stocks to include in this video, I will lean on the AB Disruptors ETF, a newly launched fund from AllianceBernstein. AB Disruptors ETF was launched on March 22nd and now has a tiny $8.2 million in net assets. Managed by portfolio manager Lei Q, the actively managed ETF looks to hold 80120 stocks. It looks for companies that have innovative, differentiated products and excellent management teams. AB Disruptors ETF has 99 holdings, with its top 10 accounting for 20.36% of its portfolio. My selections will be companies disrupting industries from three sectors and in the fund's top 10 holdings. Number 1. NVIDIA. NVIDIA is the ETF's largest holding, weighted at 3.58%. NVIDIA stock is up 88.7% year-to-date. Analysts from Bank of America Corp. issued a note to clients on April 19th that suggested the artificial intelligence boom could be very good for NVIDIA. Having already almost doubled less than 4 months into the year, shareholders ought to be pretty happy about their situation. Surging AI workloads in cloud enterprise data centers could shift more computing horsepower value towards specialized accelerators such as NVIDIA graphics processing units and custom chips from Broadcom Marvell, and away from traditional x86-based INTC/AMD server CPUs. Business Insider reported the comments of Vivek Arya, a senior analyst at Bank of America Securities. As a result of its premise that the demand for specialized accelerators could be greater than the traditional x86 processors, Bank of America raised its price target for NVIDIA from $310 to $340, considerably higher than its current share price of $270. Of the 47 analysts covering NVIDIA, 34 rated it as overweight with a median target price of $300. I'm a big believer in NVIDIA CEO and co-founder Jensen Huang. As long as Huang runs the show, innovation will be a big part of the company's DNA. Number 2. Intuitive Surgical. Intuitive Surgical is the ETF's sixth largest holding, weighted at 1.69%. Intuitive Surgical stock is up 13.11% year-to-date. I have recommended the Da Vinci robotic surgical system maker twice before. I first recommended the stock in March 2013, suggesting that any slowdown in system sales wouldn't materialize. They didn't. The company's shares are up 500% since, despite a big come down from the all-time high near $400 in December 2021. On April 19th, Intuitive Surgical stock gained 13% after reporting first quarter 2023 earnings that were much better than analyst expectations. In addition, because it reported its biggest growth rate since mid-2021 of 26%, it raised its outlook for procedures in 2023 to 19.5% at the midpoint of its guidance, 550 basis points higher than its previous projections. The first quarter results and commentary were very impressive, leaving us reinforced in our view Intuitive can sustain mid-teens revenue compounded annual growth rate, making it a standout in medtech, said Truist analyst Richard Neueder. As a result, he reiterated his buy rating and raised his target for price to $325 from $300 earlier, Barron's reported Neueder's comments. Intuitive Surgical has been disrupting the healthcare industry for years, so no one should be surprised it remains a growth leader. Number 3. Booking Holdings. Booking Holdings is the ETF's ninth largest holding, weighted at 1.6%. Booking Holdings stock is up 31.86% year-to-date. I'm fairly positive about the travel environment right now, Barron's reported Fogel's February comments. We had a very good 2022, and that momentum has carried into 2023. My unscientific observations confirm Fogel's comments. Seriously though, he's right to call 2022 an exceptional year. Its revenue of $17.1 billion was 56% higher than a year ago, while its operating income, at $3.1 billion, was 162% higher than in 2021. Its free cash flow in 2022 was $6.19 billion, or 36.2% of its revenue, up from 23% in 2021. Based on a market cap of $101.3 billion, it has a free cash flow yield of 6.1%. Anything between 4% and 8% is a reasonable price. I'd love for Booking to leverage AI further to improve the customer experience. In March, Fogel wrote on LinkedIn that Booking had used AI for over a decade. However, it is approaching generative AI with cautious optimism. For now, it will tread slowly on this front. Thanks for spending some time with us today, Timely Investment Research. We're so glad you did. If you found value in today's video, please give us a like, hit that bell icon to never miss an upload, and hey, don't forget to subscribe.